Hey guys, welcome back to Wonder FX. Today we're going to be talking about how to beat the market makers. So the first thing we're going to do is we're going to define what the market makers are. So they're basically the banks, they're the large institutions, they are the hedge funds, liquidity provider. So basically an intermediary between a buyer or a seller of currencies, gold, whatever it is, they are the market makers. And what are their objective? Well, the objective simply is to make money. These guys do not lose, okay? They want to make money. And part of their strategy in making money is by inducing traders to take the wrong positions, okay, and then reverse price to hit their stop losses, okay? So they're going to create a trend or what seemed like a trend, and people jump in that trend, and then they reverse the market very quickly. And I'll show you examples of how it's done. And they do this multiple times in a session, multiple times in a day. Okay, so if you watch the progression from Asia to New York, you're going to see how they may move price by 50 pips or 25 pips in Asia. London opens, they might extend that range, come back down, hit stops. New York opens, and then they go back in the opposite direction, hit more stops before eventually trending the market in a certain direction after they've cleared the books. So they want to induce traders to sell. And once they've gathered enough volume, okay, then they're going to come in and take the other sides of their trade, absorbing all of these orders, okay? They can absorb all these volumes that they've accumulated, all right, and then take prices in the opposite direction. And by doing all of this, it creates panic, it creates fear. Traders starts to question the decision. When you buy and then price hits your stop loss, and like, oh, and then you sell and then price hits your stop loss, you're like, oh my god, you don't know what you're doing anymore. Okay, like it just creates confusion, and that's what they do every day. They want to create these situations that will make you question yourself. Okay, that will make you hesitate. That will make you maybe impatient. That fear of missing out, it's moving, and then you jump in, and the minute you jump in, price begins to reverse. Okay, that's what they want to do. That they want to trap traders in a certain direction and then take the other side of their trades. Okay, many of these guys are traders. Many of these guys are traders, but the only difference between them and us is they have the advantage of volume, huge volume. They can move prices at will. Now, they wouldn't be able to move prices beyond a certain range. Okay, I don't think the IMF would allow that. Okay, because in stock trading, you find that they put a temporary halt or a circuit breaker. Okay, once price breaks above a certain range, they're going to put a temporary stop to trading, a temporary freeze. And something similar happened recently with the Russian ruble after they invaded Ukraine. There was a temporary halt to trading, okay, to stop the market from going into crazy ranges. So they're going to put all this hold in place until the market gets back into some sort of balance, okay, before the market reopens. All right. So likewise with the market makers, they would not move prices into crazy ranges. Usually, you must have heard of the average daily range. Usually, price will not exceed that significantly on most days. All right. So what's going to happen is session by session, they're going to be moving prices by 50 pips in one direction, come back down by 50 pips, go back up by 50 pips, come back down again before they decide to trend the market. The direction price was actually intended to go. Okay, now after they've cleared the board on both sides, they've hit stop losses on both sides, they will begin to trend the market. Okay, where do you find this kind of behaviors? All right, the highs and the lows. These are the most important part of trading, the highs and the lows. Okay, the high of the day, all right, the low of the day, high of the session, low of the session, high of the week, high of the month, high of the previous day, low of the previous day, high of the previous week, low of the previous week, high of the previous month, low of the previous month. Okay, for me, the high of the previous day and the high of the day is the most important for me because I want to see how price behaves at that point. Okay, I want to see how price behaves at that point to determine what I'm going to do. Okay, so high of the previous day, low of the previous day, high of the day, low of the current day. I pay a lot of attention to that because usually that's where they come to play. That's when they come alive. Once price hits those levels. Okay, like I've said, they want to induce traders in a certain direction. So once price hits a high or a low, how price behaves at that point, okay, determines what they're trying to do. Are they going to break out and expand that range, or are they going to hit stops and reverse price? All right, I'm going to show you examples from today on this kind of behaviors. Okay, so again, timings now and behavior, timings and behavior, how price behaves 1 hour before the session opens. Okay, so between the first hour of the session and then the second hour of the session tells a story. So the hour before the session opens, the first hour, which is usually a stop on. So the hour before the session opens mostly is a stop on hour. Okay, sometimes if we had a high or a low, all right, and 7 o'clock, which is the hour before New York opens, you're going to find there is some sort of stop hunt, especially if we're at a high or a low. And if we're not, you're going to find that the first hour or the hour before the session opens begins the trend. The first hour would continue to trend to the high or to the low. Okay. And then the second hour would begin the reversal. All right. Sometimes all this stop hunt happens between the hour before the session opens, the first hour of the session, and then the second hour of the session. And then at the end of the second hour, price begins to fall. Okay. There are different variations of this, but the highs and the lows are the most important part. The highs and the lows of the day, the highs and the lows of the previous day, extremely important. Okay. And now how price behaves at that point. All right. How price behaves at that point tells the story. Is price trying to go lower? Is price trying to go lower, hitting the lows and not going any lower? Then maybe there's a reversal. Or as price broken below the low and then creeping higher, trying to go higher towards the broken support in this case. All right. And it's not going any higher. Okay. Usually you'll find that behavior between that 7 o'clock and 8 o'clock, or between 1 o'clock and 2 o'clock EST. All right. So you're going to see price beginning to trend towards that broken support. That's when you're ready to sell. All right. Because you know price is broken and price is not really going higher and it's trying to. All right. And that's the point you're going to come in and sell. All right. But most times, watch the behavior of price after it's broken a support or a resistance. All right. That tell the stories. And if you combine that with timings and the behavior, you've got this figured out, guys. All right, I'll show you examples on the live chart and then we can see how this works. So here we are on gold today. This is what happened today. Price is still falling, but just watch the behavior of price, okay? Look at how price behaves at the highs and the lows, all right? So we're going to start by drawing our swing highs and swing lows, okay? All right, so that was a high there. Price broke out of that high, came back down. All right, price is trying to go lower, not going any lower, and then price begins its uptrend. Okay, remember what I said. Price is looking to induce traders in the wrong direction. All right, before reversing price. So everyone beginning to sell, all right, they immediately underwater. Look at this. Price went all the way back to the top. All right. So all the stop losses have been hit. Okay. Price came back up here, hit more stop losses. Everyone was gone break even. They're already out of the market. Okay, and then price came back down. But remember what I said in terms of timing. Look at the behavior of price an hour before the session opens, which is at 1 o'clock. It's the stop hunt hour. Okay, price stop hunted higher. The first hour of the session, this is the 15 minutes chart, 1, 2, 3, 4. The end of the first hour. The end of the first hour went higher. Perhaps you're thinking the price may end up at the high of the day, but price did not get there. But at the end of the first hour, we see price print an engulfing candle and price came back all the way down. Okay, to take out all those buyers that bought at this point, price took them all out, right, with this week and then repeated the process. Okay, so if you sold here, price may hit your stop loss. If you don't take profit, price may go back to hit your stop loss. And then you buy, and then price goes back to hit your stop loss. You see, this is what I mean by they do all these things to confuse traders, to make them stress, to make them question the decision. Oh, what am I going to do next? I've bought, price hit my stop loss. I sold, price hits my stop loss. Okay. But if you just wait for price to get to these levels, the highs and the lows, and watch the behavior of price, okay, when it gets there, you'll have a better chance at cracking this. Okay, so if you're looking to buy at this level and you're waiting for, of course, the session opening times, maybe you're looking to sell at the high of the session. Okay, or you're waiting for price to get to the low and you're buying at the low of the session. All right, not all of this may be trades you're going to take, but just looking at the behavior of price at these levels. All right, now we have a high in place at this point, and at the beginning of the session, what is the behavior of price an hour before the session opens? Okay, look at price coming downwards. Price came all the way back down to the low of the current day. All right, this was the low of the current day at this point, the low of London. All right, price hit the low and then proceeded higher very strongly. Okay, remember the high of the day. This was the high of the day at this point, the highest point of the day. Price approached the high of the day, did not hit it, but all these sellers, okay, all the sellers at this point, the breakout from this pin bar, all right, everyone that sold here, they're probably taking out the trade. They're probably out of this trade at this point. So they hit the high, came back, hit the lows, all right. And at the beginning of the session, they went lower. You see, price is creating some lower highs, but not really going anywhere. Price is creating lower highs, but not going anywhere. And this move exhausted at the low, and price reversed. Price reversed strongly to where? To the high of the previous day. Price went back to the high of the previous day over here. Price hit the high of the previous day. Again, remember timings. Timing is important here, guys. The first hour of the session, took prices higher. 1, 2, 3, 4 is the first hour. The second hour continued the move up. 1, 2, 3, 4. That's the end of the second hour. And guess what happened at the end of the second hour? We see a strong move back down. So price came down, hit the lows, took everyone higher. Hit the lows, took everyone higher, went higher, came all the way back down. They've cleared the books. They have cleared the books, guys. All right. So anyone who bought, stop loss hit. Anyone who sold, stop loss hit. All right. So every day, this is what they're trying to do. They're trying to induce traders in the wrong direction. So anyone looking to sell at the breakout, thinking, "Oh, look, price is breaking out. We're looking to go lower," and is setting their sell stop orders at this point. They're getting taken out. Stop loss getting hit. Oh, look, it's a buy. Price is in an uptrend. All right, we're going higher. I'm going higher. I'm going to buy here. Price hits you out as well. All right. So this is the job of the market makers. Once you can see what they're trying to do, honestly, guys, you can't unsee it. The highs and the lows very important. The high of the previous day extremely important. The low of the previous day extremely important. And any swing highs or swing lows, when price gets there, how this price behaves, and of course timings as well. We've talked about the stop on hour, the 7 o'clock to 8 o'clock, how price behaves. Usually if price is going to break out, on many situations you're going to find something where price hit the lows and break out, and then between 7 and 8 o'clock you're going to see a retracement like this to that level, and then price breaks out. Okay, again, in the previous day, we have another situation where price hit the low of the previous day. Okay, price hit the low of the previous day. And at the beginning of the session, we see price come back down to retest that low. Okay, the minute price hits it, and after a creeping trend down to the low, price hits it. Your buyers is to the high. You're thinking price may get to the high of the day, high of the current day at this point. But price hit the lows, went back up, retested the low, and now we trended higher. Okay, price went higher and now give us a high. How price behaves an hour before the session opens. All right, price creeps higher. All right, the first hour, 1, 2, 3, 4, took us higher, and then the second hour gave us a strong move down. Okay, give us a strong move down. This was a 120 pip move. All right, from the top, if you go down to the 1 minute chart, there was a good entry on this trade. And if you look at the Nasdaq as well today, this was an example of price breaking out and pulling back. All right, again, we see the high of the previous day over there where price hits, at the beginning of London. All right, we already see our breakout. Price already broke out. All right, so your bias may be a sell at this point. Price broke out, went back to the high of the previous day, and then began its downtrend. This was a situation where 7 o'clock to 8 o'clock, what is the behavior of price? Okay, now we have a low now in place that price is broken. All right, but look at how price behaves an hour before the session opens. We see a situation where price hit the lows and then creeping higher prior to the session opening. Okay, prior to the session opening. Immediately, I don't see any traffic down here. There is no traffic down here. The first point you should be thinking about is price getting to this level at the minimum. Okay, we see price break out and then crept higher in our stop hunt window. Okay, in our stop hunt window. All right, and price fell strongly and price is still falling. Okay, this is the idea, guys. On a day-to-day, session by session, the market is looking to do this. Okay, hour before the session opening. All right, and then the first hour of the session, price took traders lower. 1, 2, 3, 4 is the end of the first hour, and at the beginning of the second hour, price began to go higher. I hope this makes sense, guys. Go back to your chart, identify your highs and your lows, and watch the behavior of price when it gets there. There are many other things to consider when deciding to buy or sell at these levels. I'll talk more about that in more subsequent videos that's coming up. All right, but just watch how price behaves, guys. It tells a story. It makes your decision easier. Honestly, if you just stick to trading the outside of these highs and lows, for me, my current strategy, where I trade 3, 4 times a month, I'm looking at the high of the previous day. The high of the previous day is very important to me because I know that when price hits it, it's probably ready to fall. Again, in terms of timings, all right, when it hits it in my stop hunt window between the first hour before the session opens, the hour of the session, the first 2 hours of the session, when price hits the high at that point, all right, which it has in this case, I'm ready to sell that trade on most part. Of course, the other behaviors that I look at, but that's key. That's very key. So go back to your chart, study your highs and lows, and watch the behavior of price when it gets there. All right, I hope you guys got value from this. If you've not liked and subscribed, please do because it helps the channel grow and it helps us reach a lot more people that may be interested in this. Awesome. I'll see you guys next time.